Thank you so much for staying with us. Nigeria's foreign reserves surged to $40.7 billion as of August 8, 2025, largely propelled by increased forex inflows resulting from Central Bank of Nigeria's reforms and a modest rise in crude oil output. Now, according to the latest data released by the Apex Bank, gross earnings reserves were at $37.9 billion on April 30, 2025, and climbed to $38.29 billion by May 14th, and have since continued to grow to their current level. This steady accumulation of reserves is attributed to the positive effects of economic reforms instituted by the bank, along with declining inflation rates, falling commodity prices, and sustained long-term stability of the naira. This economic stability has brought multiple advantages to businesses, households, and broader macroeconomic indicators. Foreign reserves have remained above $40 billion mark for nearly 2 weeks, closing last week at $40.72 billion, with sufficient capacity to cover over 10 months of imports needs for the economy. Well, let's stay with this development and other issues around the financial sector. My guest is Mr. Paul Alaje. He is a partner senior economist with SPM Professionals. He joins me live from our Abuja studios. Mr. Alaje, good afternoon and thank you so much. It's always good to see you.
Yeah, good afternoon. Thank you so very much for having me.
I think it's good to start our conversation around this. Looks like another good news. Foreign reserves are picking up $40.7 billion US dollars. We see that rise, that increase back to back with regards to our foreign reserves. Would you really say that the reforms of the CBN in recent times around the FX market is paying off? Or what more do you think could be responsible for this? We know there's improved output in crude production, but tell us what you make of this.
Generally speaking, I think it's responsible. The central bank policies are responsible for what you have seen in the reform, what we have seen regarding the increase in foreign reserve, nearly $41 billion. That is the first benchmark we must surmount. We must go beyond $40 billion in the first instance so that we can cover at least 10 months import and grow this to somewhere around $50 billion. Then we can say Nigeria, based on our pattern of import, we've gotten to a relative comfort level. So, but this is something that is major. We've not been here in years to get to $40 billion in terms of our foreign reserve. So when the policies are not good, we talked about them, but when the policy is yielding good results, it's also important to state that this $40 billion reserve, it's a major positive. It's on the major positive compared to where we were when we were 15, 20, and $25 billion. But this is largely a positive one for Nigeria, as it gives us room to do a number of things. Now, what are the things that led to this? Quite a number of things, if you ask me. First one is savings that comes from crude, savings from non-crude exports, as well as Nigerian remittances from abroad. Lastly, I can also talk about monies that are borrowed in hard currency but remitted to government or fiscal authority in the naira. Recall that before now, NNPCL remittance Nigeria was negative. As a matter of fact, it was also said that the Nigerian authority were owing NNPCL from argument and publications out there. But today, even though what is remitted is not significant enough, but we can say that it has since left negative remittance to somewhat positive in the vote of government. So all of these, among a few other sources, has led to positive or increase in foreign reserve for Nigeria.
That's a good one. But let's look at the advantage. You've talked about 10 months import capacity for the country, which of course is a step in the right direction. But for businesses, for households, and the larger macroeconomy, what does it mean for them?
First of all, it will boost confidence in the Nigeria economy for someone to come and invest. You see that Nigeria MPC address NPR perhaps to all-time high, and this also sends signal towards government bonds treasury bills and government bonds will be. You have also seen how high interest rates our foreign loans or foreign bonds, green bonds, have been over the time. These are all pointing to one thing called confidence. Now, you are able to sit on your chair in Lagos, and I'm here speaking with you from Abuja, because we have confidence that network companies will not disappoint us. And that is why people can see us all over the world or watch us all over the television screen as we're having this interview, and those that watch us subsequently. Now, when there is no confidence in a country, there are parameters to check. One is the country's foreign reserve. Why? Because when a foreign investor, which is mostly led by own countries, gets to a country is watching, if I want to go, will this country be able to pay back what I've changed to their local currency? Do they have robust foreign reserve to pay me back? For Nigeria, 10 months based on this newly released number have been covered. What does it mean for household? When producers come, if they come, which they should come, it will mean that you might have increased production of foreigners to come to our country. So having gotten this, the next attention of government will be, how do we now drive in foreign, real sector, foreign direct investment into the country? We have seen that portfolio investment have returned. We have started seeing increase in portfolio investment, which is the beginning, which is the positive, which is what we should say it is good that we have seen the return of these foreign investors, especially portfolio investors. What we now need to see is real investment. But recall that in the last 11 years, this real sector investment has dwindled. And that is why when I heard from your opening remark that one of the major companies around the world is looking at bringing $2 billion into Nigeria, is fine. In fact, the trips of Mr. President going to Germany, going to the UAE, Saudi Arabia, and so on and so forth. Investors in those countries may attend the meeting, but they are looking for what thing? Is Nigerian foreign reserve enough to give us confidence when we want to leave? If the answer is yes, as we are moving towards that yes answer, one is company could be established in Nigeria, Nigeria household will be employed, Nigerian businesses, we have new partners, Nigeria tax authorities, we have new revenue window. Recall that our tax bill has not been passed to law, and we are in a new era from 1st of January 2026. More money for Nigeria, more revenue will come in. But the question now is, how soon can we put all of this together so that we can start on a clean slate, on a fresh slate, and see that boost that we want and desire for our economy?
I agree with you so very well that the FPIs are indeed coming in, and that confidence shows even in the stock market. But again, you talked about it. FDIs, foreign direct investment, is what most of us are talking about. And we know that that takes a bit of time to get investors to dip their money in.
Absolutely. And you see, the first step they need to see before they come, is what we are talking about this afternoon. Nobody will come and invest in your country if they think your foreign reserve is low. You saw what happened to the airlines and Nigerian authority until the recent central bank governor feels that it's important to pay. And those that have not been paid, the central bank governor in an interview have said, because they are not completely genuine based on their own understanding, authority in central bank. Those are the representatives of Nigeria. If they feel it's genuine, they would have paid those money. So what we need to do as Nigeria is confidence, confidence, confidence. When confidence is strong enough, foreign direct investor will come. So we need to look at all parameters that determines confidence in a country. One of them, very important, is your foreign reserve. Is it strong enough? Can it pay us back? When we are leaving, will we be able to take our money? And recall that for those portfolio investors, they can leave very quickly. And that is why they are the low-hanging fruit that we can quickly attract to our country. So it's a good news for us. It's a good news for the market. And of course, eventually, we are able to translate it from portfolio investment to foreign direct investment, then it will be a good news. That good news will trickle down to the firms, which is another component of economic structure, and lastly, to household. And that's the way it works.
Hot money, that's the FPIs there, as it's always called here. The Naira has maintained a bit of stability, and you would agree with me. And also, there's an argument in some quarters that it's a managed float system. and that is allowed in economics. You are an economist. I want you to help us understand that if there is a managed float.
I've had 4 interviews with you. Yeah, I've had 4 interviews with you, and I've told you I have never and I will never support complete floating system.
Great.
I am not saying this just because I'm in Nigeria.
Great.
As someone that features on different African platforms, I have advised all authorities in Africa. And I'm happy that some have started listening, from Tanzania to even countries in Southern Africa, that what Africa can manage, if it must go market system, is managed floats. I remember my Twitter handle, many people came and said, no, it is not practicable. I tell them what they know is economic theory. If you go to School of Economics in you study applied economics, you see that there is no African nation that can completely float the currency. And I will tell you why. Nigeria foreign reserve is kept in what? In the dollars, in euro, perhaps in pounds. How many other countries are keeping their country in naira? How many other countries are keeping their country in cedi? How many other countries are keeping their currency in African countries? And I've said, listen, African countries, if truly you want AfCFTA FCA to work, that's Africa Continental Trade Agreement to work, you cannot do that and have different currency. Eurozone has the euro. When the United Kingdom left the Eurozone, they felt the impact. Not my word. You can see the statistics for yourself. If Africa must unite, create a single currency, whether you are going to adopt the West African echo, or everybody comes and says, Nigeria, you have the largest population, and up until recent time, your economy used to be larger. Let's look for a currency, and let all our reserve be kept in that currency. All single exports out of Africa should earn in that same currency. Then you would see that nothing is wrong with Africa. Companion or fool shall be destroyed. When we don't come together, we will be broken into pieces like a strand of broom. But when we come together, build our economy, starting from agro, capitalizing on the areas both where we have comparative cost advantage, and I'm sure you don't want to hear this, because I know those who might not want to hear what I'm about to say. Even areas where we don't have comparative cost advantage, they are more vital, they are more important for the generation we live in. Economics is not static. Economics is dynamic. You need to understand, we all need to understand that before now there was no AI. We will not say few countries that quickly understood AI, have competitive cost advantage on AI, should be the one to concentrate on it. While other countries, so-called African countries, should be on looking. We should sit with cocoa, we should sit with gold, we should sit with crude oil, and we should look to other mineral resources. That will be a fallacy. We need to try ourselves in the middle of manufacturing, try ourselves in the middle of AI, so that we can compete. The boundaries have since collapsed. Anyone still teaching those is teaching old, archaic economic theory that does not apply in this modern century. Therefore, what I think we need to do, and which of course has been backed up by several research publications, is truly Africa needs to come together, and if we must come together, we need a single currency. And this single currency is what all Europe, all Americans, North and South, West and East of Europe, and Asia should exchange with us with. Then you will simply see the true strength of Africa as a continent. Many things are living in Africa, many of which are not accounted for. You need to look at research, the volume of gold living African continent, and I'm not referring to Nigeria. There are quite a number of countries in Southern Africa blessed with gold. Most of these gold find their ways to the Middle East. I will not mention the name of any country, but they are not recorded, they are not accounted for. Imagine if all of this is coming in the same currency that Nigeria is earning its good receipt from, that Central African Republic, the country that is torn in internal crisis, is earning the same currency, and Ghana is earning, South Africa is earning, Egypt is earning, Morocco is earning. What do you think will make of Africa? That strong continent people can reckon with. Perhaps this is also one of the things that is affecting Nigeria. It's not that Naira cannot be strong. Naira could be strong. Yes, we will make our internal policy, but we also live among other nations who have not yet agreed. And this agreement is very important. Until Euro got it, what was their currency like? Until they came together and come as a strong country spending euro and having a common market. So that you wonder where AfCFTA have not really been functional, because you can, the numbers are there. Have really Africa been able to get it to where we want it to be? We cannot have such robust economy and be using a different currency. I don't think that will work as much as we want it to be.
All right, now, before we wrap this up, interesting conversation, I must say. We saw the CPI for the month of July, and we still have issues with our month-on-month inflation. Yes, because we know that the CBN reforms, naira stability, and all of that is helping to ease inflation. Yes, we agree. But the month-on-month thing still remains very worrisome. What do you make of those fundamentals, those key drivers? Yes, I think that's the right word. Those key drivers of inflation at this very time.
Yeah, a number of things are driving inflation. Without sounding theoretical, a number of things are driving inflation in Nigeria, and they are driving all our basket of commodity. Currently, we are above 21%. And even though that has not gotten to where central bank hopes to get to, which is single-digit inflation number, preferably, according to them, between 6 to 9%, we are still doing somewhere around 21%. What are the things driving this? We have seen food inflation. We have also seen component of core inflation. Month on month, people are going to the market and they are seeing some varieties, and this is having impact in their life. I must tell you that we have gotten to a point where monetary authority policy have driven much of what it could. We now know, and we should also know, that fiscal authority needs to get to a point where they get involved. Trade authority would also need to get to a point where they need to get involved. Why? Because currency is part of what is influencing inflation. Price of fuel, whether you call it PMS or you call it diesel or you call it gas, all of these are things that are contributing to inflation. And when you look at this, both are outside the jurisdiction of the central bank, even though the jurisdiction of the central bank is to have that stability. And stability will include price and exchange rate. And you've seen exchange rate, you've seen price, you are seeing what may look like stability. But we need a point where fiscal authority must know that policy is not just disbursing money to contractors and so on and so forth. It includes what you are seeing in Abuja, construction of roads under, I think, Minister Wike. That is part of what we need to see from fiscal land. How do we replicate this in the remaining 36 states of the Federation? By the way, in Lagos there, we see the effort of your governor putting rail tracks and bringing blue line and so on in place. How do we replicate this? Only 6 of the 36 states, and FCT maybe 7, are doing this kind of work that are tremendous and can justify some of the policies that government have made. The remaining states, we may need to have a conversation. If there are areas of challenge, what should we do? And of course, their states are not really A state. They are B or C states. But how do we support them such that farm output can get to the market and reduce what we have in terms of shortage? 2, we also need a situation where we need to really strictly combat insecurity. Because if we don't, it will say signal. When you go to the other part, which is core inflation, apart from crude, what else is the cost of energy, talking about electricity? We have heard in the recent time that price may go up. Now, if the price goes up, be rest assured that not just month-on-month inflation will be affected, you are going to have year-on-year inflation also being affected. So what should we do in the circumstance where we want to have better power supply, which I understand where this minister is coming from, in terms of having more quality power supply, and also having price to go down? The question is which one should come first. I think most of the time we have seen price come first. This time, let us task the discos and the gencos and transmission company to improve. At that time, we can now say, let's see if there could be a review in price. Then we can have a balanced system where you can see that these key drivers, I think I mentioned 3 out of 5 of them, these key drivers can help, we can halt the pace as which they increase. Because the challenge now is the pace. Instead of them growing about 9% per annum, they are now growing at over 20% per annum. So how do we slow them down? If we can deal with the concerns around those things I mentioned, which include insecurity for food, which include logistics and road, also for food, which includes movement of people, which has to do with energy and electricity. If you can manage all of those, then I tell you, we can slow down the pace of increase in our CPI, Consumer Price Index, and have moderate inflation as we are ending the year gradually.
Thank you so very much, Mr. Paul Alaje, partner, senior economist with SPM Professionals. Do enjoy the rest of your day. We appreciate your time.
Thank you so much for having me.
All right, then it's time.